Hi there, Serial Trader here. I just want to do a bit more of a thorough look at the major US indices. So we'll start off here at the daily chart in SPX. And really last week, we were basically just digesting this large move we had off the pre-election low there on October 30th. And I mean, it's still debatable whether there's a little bit more corrective action needed or whether we've already put in our corrective low and we're getting ready to head up here in potentially what could be a wave 3 of potentially an even larger wave 3. So I'm going to go to the hourly chart here. I mean, the daily chart, fairly self-explanatory. But on the hourly chart, this is where short term, there's a little bit of a debate, or I'm having a little bit of a debate with myself. So it's possible that we've already got our ABC down for this smaller degree wave 2, or I guess we'll call it minor wave 2 here. That's possible, but again, you would have to label this as a truncated C wave, where the C wave didn't actually make a new low, or at least match the low of the previous A wave. Now, normally that's a bad practice, but over and over and over this year on multiple time frames, certainly on the indices, we've seen lots of these truncated corrective C waves, and then it just goes, and everyone's still waiting for that new low, even if it's marginal below the A wave. It never comes, and the market just leaves you behind, and you miss the opportunity. So that's possible that we're doing that again, and that we've already begun the next impulse wave up. I think it's also quite possible that we're working something more like this, where we've got this initial A wave down, and that ended at 35.1191. This is all of a B wave up, okay, and we'll just subdivide the B wave to a smaller degree there. So it's possibly a little ABC up for B, and then we do still need that one more move down, even if it's just a marginal new low below 35.11. That's certainly possible, and you can see off this low, this is certainly contained within a parallel trend channel so far, although it looked like it tried to break out of it on Friday, but then closed back within it. And then you can also see on this little ABC up for B, you're potentially working a close A versus C equality relationship. And you can see it rejected right off that level, or close to it. So 35.94.24 would be the little minor, or not even minor, it's a smaller degree in that minuet, as I have it labeled. A little minuet A versus C equality that came in at 35.94.24, and the actual high on Friday was 35.93.66. So like within a point or so of that perfect AC equality of that very small degree. So if that really remains the top of this move, then we could definitely see a C wave down here to complete that second wave, which would actually look more proportional and look prettier. But again, cautious that we may have had that truncated C end here. But I would say if you're long, stay long. If you're looking to add, I would wait and see if you get this C wave down. And if you're not long at all, don't let this get too far away from you before you kind of jump on the train, if that's what's going to happen. Okay. Me personally, I'm long. I'll certainly be happy to add if we do get this additional decline. But if not, position is sufficient to ride this up. So either way, I think I'm good there. Now, as far as if this is just ABC up for this larger B, and we're going to get the C down, let's go through some targets. And what do I have working here? So let's move that. Hang on there. Okay, so I just paused to clean this up a bit. But let's work some potential targets. So we'll do this larger A versus C equality relationship. That would come at 34.59.58. So that's a decent target. We also have the A versus C 786 and 618. Let's put those up there. So the 618, that would be basically a little double bottom, matching the previous A low at 35.1191. The 618 would be just marginally below that at 35.10.80. The 786 would be 34.88.27. Then again, the equality would be 34.59.58. And I like how we have this little confluence here with the actual overall fib retracement of this initial move up from the October 30th low to the November 9th high. So a 38.2% retracement of that, which would still be very minor, shallow retracement. That matches up quite nicely with some of these other fib relationships. So again, 3488, just below 3500, looks like a nice area. And then of course you have the 50% retracement a little lower down there, around 3440, we'll say. So this kind of, let's call it the target zone, if you will. That this is a nice area if we do get some weakness, perhaps early next week, and we are going to get this little C wave down. This is a nice area to start putting on some long positions. Kind of a high confidence technical area. Okay. Now that's assuming the low's not already in, which it could very well be. But if it's not, that's the area I'll be looking at for fresh longs. Okay, so I'll leave it at that. Again, let me just delete this and just kind of show you the other scenario where we already have the lows in, and that is where you just do this. You got the truncated C, and we're already starting up off to the races, right? And we already got perhaps our first little one up. Get a little 2, 3, 4, 5, lower degree, obviously. So that's certainly possible that that's underway. But even in this scenario, like if I go in on the 15-minute chart, I mean, it's not super clear on the 15-minute, but you could kind of make the case we got a little 1, 2, 3, 4, 5 up looking mature. Again, lower degree. And that even in this scenario, we need some sort of corrective pullback, right? Some sort of, not to a new low, obviously, but just a corrective decline of a much smaller degree. Okay, so that is potentially in play here. And I guess it's pretty simple. If early next week, like say we've put our top in and we're starting this little correction, if all we do is just a little three-wave decline, and we don't go anywhere near those lows down here, and then we start coming back up again, that's probably the scenario, right? That's probably what we're working, where the low was already in with a truncated C on the 12th of November there. So just keep that in mind. There's a couple scenarios in play. You know, short term, it's not super clear, but I mean, on a somewhat larger degree, it's very obvious that it's going to go up and make probably substantially new highs. But just these little short-term nuances, that's really what we're debating here. So just keep that in mind. Don't lose sight of the bigger picture, which is certainly looking for higher prices. Okay, well, that's probably good for the wave analysis there. Now, if we go over to the Thinkorswim charts, so daily SPX candles, I mean, we're holding above all major moving averages. They're all pointing in the right direction. They're all in the most bullish orientation to one another they could possibly be. So looking good there. Daily candle, certainly nothing bearish about this daily candle. You can see we're holding above this daily T line quite nicely. I like that we kind of broke out above this falling trend line, and now we're just kind of testing it, a little corrective action, dancing on it, and then probably heading back up soon, right? So that's looking good on the daily. Weekly chart. Weekly chart, okay, that's a little bit of a pause, or not, I wouldn't call it, sorry, cause for concern. I wouldn't say cause for concern, but perhaps cause to expect a little bit more consolidation here, because that is a weekly doji star, kind of an indecisive candle. Yeah, we opened up big, but then other than the intra-week volatility, we closed at a very similar level to where we opened. Very small real body, right? So perhaps indicating a little more consolidation needed with a weekly doji star like that. But again, the short-term chart will decide. This is just kind of a weekly view of it. Interesting though. It's after such a big green candle, this is likely just a pause within a still developing uptrend. So that's my read on the weekly candles right here. Okay, now we'll go to the Dow Jones Industrial Average. Similar situation there. Dow showing a little bit of relative strength, maybe a bit of rotation into some of these more cyclical oriented stocks, a little bit of rotation out of tech, although I think that'll probably be short-lived. Either way, though, I mean, they're all going to go up. It's just to what degree in relation to one another. That's really all you're debating. But yeah, the Dow broke out well above the old all-time high. And we're just in this little consolidation phase. Very similar to SPX. Likely just consolidating before the next big move up. Weekly candle on the Dow. Same idea. Weekly doji star, so perhaps indicating a need for some more consolidation. Okay, well, I won't waste too much time on the Dow. It's basically the same as everything else at the current moment. NASDAQ composite, again, made a new all-time high. A little bit more of a consolidation as far as the depth of the correction, but same idea. Now, is this A, B, and do we need a little C down, or is this all of the correction, and we're just working our initial, next wave up? Again, longer term, it's not going to matter. It's just these short-term nuances, perhaps for short-term trades or trying to get a better entry. That's all that's really the concern in that aspect. But NASDAQ composite certainly poised for much higher levels once it finishes this consolidation period. Daily candles, again, nothing to remark on there. Still above the daily T line for now. Weekly candle on the composite. Let's see here. Okay, now this is a little different than the other two indices. So this is perhaps a hanging man candlestick. So the other two were dojis. Now, dojis are potential reversals, but they're often just kind of a pause in the overall trend. Whereas a hanging man, certainly at the top of the range, and obviously we're at the top of the range, being that we're at the all-time high. We just made the new all-time high. A hanging man could be a potentially bearish reversal candle at the top of the range, but I mean, if everything else is going to go up, the NASDAQ's not going to go down, okay? It might not go up as much if there is truly a rotation into some of these other sectors, but it's still going to trend up in the general direction of the overall market. Certainly, my opinion is that it will. So I would kind of ignore this hanging man candle. I mean, unless it really starts coming down sharply, it has to really prove it. So I'd kind of disregard that here, given everything else, giving context to it, right? Okay, so only real chink in the armor of the bulls is potential hanging man on the NASDAQ composite weekly, but other than that, not seeing much cause for concern here. Okay, and we'll go with the VIX. Now, the VIX is absolutely tanking, and that is obviously very bullish for stocks. And that'll likely continue as time goes on. We're probably going to get into a lower volatility period eventually, where stocks just kind of churn and chug along and mostly go up every day, and volatility gets to much lower levels and just kind of goes sideways. That's likely the scenario. Since we've had this very high volatility period, usually that's followed by kind of a period of low volatility and overall kind of trending bullish market. So we'll see if that plays out. Okay, now as far as the, let's have a look here at the VIX VVIX tool. So we're back below the red moving average on VVIX. We're back above the blue moving average on SPX. So certainly looking bullish as far as this tool is concerned. Again, holding the possibility of one more corrective low here, but I wouldn't hold your breath on that. It's just kind of a nice entry gift if it happens to get a nice pullback to buy. But don't be too wrapped up in that. If things just start going up substantially from here, just jump on the train, because I think there's plenty more room to go to the upside. But yeah, technically using this tool, we're on buy mode, so that's looking good. All right, well, that's probably all I need to mention heading into this next week here. And basically, to put a bottom line on it, minor corrective action may continue a little bit more, or we may just start trending up immediately. Either way, the larger trend is resuming and will be probably significantly higher in the next few months here. So that's the overall message I'm seeing. All right, Serial Trader signing off.